Call Cleve Atlanta Real Estate Show on Talk Radio 640 WGST. Now, here's Cleve Gaddis.
We're very excited during the second segment of the show. John Burchfield with Brand Mortgage is our guest. John makes it his mission to guide each home buyer step by step through the entire loan process so they are educated and confident in the mortgage options available and can make the absolute best decisions along the way. John can be reached. Why does John always get a standing ovation? I don't get a standing ovation now when I come on.
Because you're on every week.
Oh, okay,
John's on every so often, so, I mean, you get excited when he's on.
Well, John can be reached by calling 678-226-7887. One more time, 678-226-7887. If you are listening, you need to refinance your loan, you need to get a loan to purchase a home, or if you are scared to death to get a loan to buy anything, still, John is the person you need to call. He's got the heart of a teacher. He'll take care of you. Again, 678-226-7887. Hello, John.
Hey, guys. How are you?
We are absolutely fantastic, and I want to just jump right into the meat of this segment. And let's talk about interest rates over the last 20, 30 years and what payments would be today versus what they would be in the past. Can I just turn it over to you and let you give us some good details on that?
Absolutely. You and I were talking earlier, and I was really anxious to do the research on this and to see what we got. And absolutely fascinating stuff, Cleve. What we found out is that in 2016, we've had an average interest rate of around 3.5%, which on an average sales price home in the Atlanta metropolitan area.
So what are we using for that? 260, 270? What are we using for our average? 270, okay.
270.
Okay.
$270,000 borrowed would result in a principal and interest payment of $1,289 at a 3.5% interest rate.
Okay.
Now, let's compare that to 10 years ago. Now, 10 years ago wasn't that long ago, but we were at 6.5% as an average rate in 2006, which would have resulted in that same loan amount, principal and interest payment of $1,750, almost $500 higher per month just 10 years ago.
Oh, and that's almost $500 per month higher every month for 30 years.
30 years. So a significantly higher cost of that home over time.
Well, so just a little quick analysis. That's $180,000 more in payments over a 30-year mortgage, and I'm doing that in my head, so I could be wrong. That's amazing.
I think you're right. And let's keep that going.
Okay.
You jump back to 1996, 10 years before that. Now you're up to a 7.75% average interest rate in 1996, resulting in a $1,968 principal and interest payment. So now you're $700 higher than what you are today for the same loan amount borrowed. Again, 30 years of making that $700 higher payment.
That's amazing. That's $8,400 a year for 30 years. That's $240-something thousand bucks. I'm doing this in my head, and I hope I'm not totally off base, but that is amazing. If you've just joined us, you're listening to the Call Cleve Atlanta Real Estate Show. We're talking to John Burchfield with Brand Mortgage. He is our preferred mortgage provider. He can be reached by calling 678-226-7887. Again, 678-226-7887. John,
he's also my friend.
He's Alfie's friend. Now, yes. I'm not sure if that bodes well for John or not, but he's Alfie's friend for whatever that matters.
You just destroyed my credibility, Alfie.
No. Actually, I will tell you, most of you listening have never met Alfie. He is a good guy, and if you're Alfie's friend, you're in good shape. I can promise you that. Do you have anything further back than 96?
Yeah, we can go back all the way to 1986, 30 years ago. Average interest rate of double digits. We're back to the 10.25, resulting in $2,440 for $270,000 borrowed. That's twice what you pay today for the same loan amount.
So that's $14,400 per year more in interest over 30 years. What is that, Alfie? 400 and something thousand bucks? So the Alfie's like, I don't know, Cleve. Give me my calculator. I should have told you to use a calculator.
Let me get my calculator
Alfie. John, he's using all these controls, and actually, I will tell everybody a secret. He is eating Lay's potato chips as well during the during the radio show.
Me out.
That's amazing, though. So you're $400,000 in savings. And John, when you get an interest rate of 3.5 or 3.75 or 3.25 or maybe 3 on a 15-year loan or just slightly under, those rates are locked in for 15 years or 30 years. The rates do not change.
Yeah, that's the magic of it. I mean, not only is the affordability of a home lower than it's ever been before, but you're able to lock in your housing expense. Now, what we know is that the opposite of owning a house is renting your home, and those rents are going to continue to increase year over year. So the percentage of your income that is consumed by your housing expense, rent versus owned, it's going to stay the same. It's going to stay the same when you're renting. Your income's going to go up, but your rent's going to go up.
Yeah, and
whereas
maybe
when you own a house, that's not the case.
Maybe your taxes and insurance could go up a little bit, but they're not going to double or triple. Now, you said the opposite of owning a home is renting a home, and I would say the opposite of owning a home is living in the woods. I'm sorry, John. I'm sorry, John.
No, you're right.
And the federal government lets you deduct, under most circumstances, the interest that you pay, and the federal government lets you deduct the taxes you pay on your property. So if you spend $1 and you're getting a 25 or 30% tax advantage, it's really like spending 25 or 30% less, if that makes sense. So you spend $100, but you get 25 or 30 of it back from a tax standpoint. That is huge. It's just huge. Now, John, if I called and said, and for those of you who just joined us, you're listening to the Call Cleve Atlanta show. We've got the Call Cleve Atlanta real estate show. I'm so excited I can't remember the name of the show. We've got John Burchfield with Brand Mortgage on as our guest. 678-226-7887 is the number to call to reach John. If I wanted to invest in something that would appreciate in value, let's say I wanted to buy Apple stock, John, I could call you, pay 5% down, finance my Apple stock over 30 years at 3.5% interest, 3.375, something like that?
Yeah.
So if you want to speculate in other investments, nobody's going to lock in an interest rate for 30 years. And when you think about it, you can't also go to your local State Farm or Allstate or Liberty Mutual or whatever insurance company and say, hey, I've got $300,000 worth of Apple stock. I'd like to give you $800 a year, and I'd like you to insure me against any losses.
Yeah.
So your interest rate can be fixed, and you're guaranteed against loss. That is just huge. John, real quickly, if somebody's got some credit issues, a couple little blips on their credit, how do you go through? What's the process you go through to correct that?
Well, that's one of the things we take a lot of pride in. Is we love to offer a complimentary credit review for anybody who's interested. They can call us. We can take a look at their situation. Guide them through some steps of what they can do to maybe pay down some debt, deal with some old creditors that may be still hanging around, how to build new, positive, good credit so that they can turn their fortunes around in terms of their credit score, their credit environment, and help them borrow money at a less expensive cost moving forward, whether that's a car, credit cards, home, any of those things. We can help with that in terms of offering a complimentary credit review.
Absolutely free. And I would assume if somebody's situation is bad, there's no laughing, there's no snickering. It is, hey, we're in this together. Let's figure out how to get you sorted out so you can move forward and buy a house.
You bet.
So one of the questions we were going to ask is how far in advance is too far in advance to talk to a lender when buying a home? I'm going to answer that question. You could talk to somebody 2 or 3 years in advance of buying a home. If you think you're going to do something and you want to know whether or not you can or how it will work, reach out to John, 678-226-7887. One final question before we go to a break, and that is what is the waiting period before a lender can count your self-employed or your commissioned income as income towards supporting your mortgage payments?
This is a big development over the last 6 to 12 months. It has been 2 years. You absolutely had to have 2 years of tax returns to document self-employment income or commission-type income. That has recently, in some cases, been reduced to 1 year. So for the listeners out there, if you've been told you don't qualify for what you wanted to qualify for recently, let's take another look at it. There may be something different now.
So what's the reason for the change?
We're finding out that just statistically speaking, the most recent year is just much more of a valid indicator of someone's potential income earnings into the future.
Got it. John can be reached by calling 678-226-7887.
This is Call Cleve Atlanta Real Estate Show on Talk Radio 640 WGST.